I appreciate you being here. We'll turn the floor over to you as you've taken the time to go through. I think we're a lot in the room today are here in anticipation for what your comments might be about the report that we have before us and up on the board as well. So this time we'll go ahead and turn the floor to you and let you deliver your report.
Thank you, Mr. Chairman. It's always a pleasure to be here with my old friends and new. And basically what we are looking at, our task was to audit the financial statements of the Louisville Arena Authority for 2016 and determine compliance with the contracts. Now, when this committee asked us to do an audit of the Louisville Arena Authority initially, our staff sat down and tried to figure out what was the best way to get into this particular audit. There's a lot of different ways. You can do a financial statement audit, you can do a special exam, but we felt like the best way to do it was to come in under the financial statement audit. And basically, the primary reason for that is the Louisville Arena Authority does have a financial statement audit every year, and we did not want to actually duplicate that cost. So we did it in lieu, and then we expanded and looked at the contracts as well. Now, the arena's viability is a public concern because Metro government payments and TIF revenues represent taxpayer dollars that are not available for other issues such as public pensions. Now, the financial statement audit had one comment or finding. The Arena Authority and the University of Louisville Athletic Association did not finalize the net annual payments by the deadline established in their lease agreement. The late payment of $1.3 million was notable because it could lead to cash flow issues for the financially challenged arena. Now, a financial statement audit does not analyze an entity's performance or operations. However, because of the arena's impact and importance, I offer some additional observations based on our review for the benefit of this committee, the Arena Authority leadership, and of course all stakeholders involved. Now, the Louisville Arena Authority is a unique entity that is not clearly defined, public or private. The authority was not created by an act of the General Assembly and is not codified in statute. The authority is incorporated as a nonprofit. Now, pursuant to the authority's bylaws, the governor appoints a majority of the members of the board of directors. The arena is funded in part with taxpayer dollars with an initial $75 million state appropriation, Louisville Metro government contributions, and the TIF. The Arena Authority anticipated paying back the bonds with the taxpayer sources that we listed, as well as revenues from the arena operations. Now, in this particular next slide, 75% of arena operating income comes from taxpayer dollars. I think a lot of people may not realize that, but 75% of the arena operating income comes from taxpayer dollars. This pie chart shows in green the extent of taxpayer contributions compared to the operating income from the arena. Now, the total original principal bonded indebtedness was just over $350 million. Now, of course, that does not include the $75 million in funding from the state in 2006. The total current principal balance for bonded indebtedness of the arena is just over $341 million, or basically $8 million of bond principal has been repaid. In 2012, less than 2 years after the arena opened, and with financial position deteriorating, the authority replaced the Kentucky State Fair Board with entertainment management company AEG. Now, although arena performance improved, TIF revenues continued to lag behind projections, and the revenue from operations was not sufficient to cover the growing debt service demands. Meanwhile, the University of Louisville Athletic Association's financial position improved significantly, as I will discuss in, of course, more detail in just a moment. Public controversy grew over the financial success of the Athletic Association and the problems with the Arena Authority. Now, by 2016, even with Louisville Metro contributing their maximum annual payments, it could be argued that the Arena Authority was facing bankruptcy as early as 2020 because of their declining financial position and the growing debt service obligations. Legislators passed, of course, this session enables the TIF to be extended for another 25 years more than doubling the total time the TIF could be active to a total of 45 years. Now, the Arena's authority's transparency and oversight, of course, could be improved. The Arena owes its existence to taxpayer dollars. However, some taxpayer protections originally put in place by legislation have weakened or even possibly lapsed. In the 2006-2008 biennial budget, the Commonwealth of Kentucky authorized $75 million in state bond funds for the Arena. The legislation made the funding contingent on the authority complying with the Executive Branch Ethics Code, the Model Procurement Code, and the Open Records and Open Meeting Laws. Based on our review, this language was not carried forward in future budget periods. And as mentioned previously, the Arena Authority is not codified in statute. Despite the original conditions, the authority has taken the position that they are not subject to these laws. Significant public resources have been and continue to be directed to the Arena. Therefore, it is reasonable for the authority to comply with these laws. However, it could be argued these taxpayer protections have been permitted to lapse. Now, the Arena Authority is not currently included in the comprehensive annual financial report of the Commonwealth of Kentucky. Auditors have presented to the Finance Administration Cabinet our analysis suggesting that the authority should be a component unit of the Commonwealth for reporting purposes based on governmental accounting standards. Now, the Arena Authority has no staff of its own, other than its board of directors, for who this is not a full-time job. All functions of the Arena, including management, are outsourced. This has led to a web of contracts, and some revenue generated by the Arena is not even reported to the authority. The authority board must rely on information provided by parties with a vested interest in maintaining their contracts. Without full information, the authority is in a poor position to manage, oversee, and negotiate for effective operation and financial health of the Arena. Now, this is certainly not a criticism of the board members. These factors make it difficult for any board of directors to have a full picture of the entity's activities. Additionally, the authority did not fulfill a monitoring safeguard in its loan agreement with KEDFA. The loan agreement requires the Arena Authority to meet targeted ratios of revenues to debt service, which is not met for some time. Not meeting this targeted obligates the Arena Authority to obtain a consulting report with recommendations on how they can increase revenues. No report was requested by the authority. Now, in November of 2015, the authority extended its contract with AEG until 2027. Authority records do not indicate any competitive procurement or independent analysis occurred before making this decision. In April of 2017, the authority also extended its sponsorship management contract with Learfield through 2027. Now, overall, the net positions of the University of Louisville Athletic Association and the Arena Authority have been on opposite trends. The chart represents the net position of the Athletic Association in red, basketball revenues in black, and the authority net position in blue. As you can see, the blue line representing the Arena Authority has decreased steadily over time. Meanwhile, basketball revenue to the Athletic Association saw a significant increase beginning with the Yum Center opened in 2010 and has done well since then. Now, because several University Athletic Association revenue sources are not reported to the Arena Authority, we cannot state how much exactly the Athletic Association has benefited from the Yum Center lease. But we can see that the Athletic Association benefits significantly from the arena-related revenue. This graph shows why the University of Louisville Athletic Association appears to be in a position to increase its contribution to the arena. Now, there are several revenue sources for which the Athletic Association retains either the vast majority of the revenue or 100% of the revenue. As an example, these charts show the suite revenue and premium seating revenue terms are generous to the Athletic Association. The chart on the left slide shows the income from the suite licensing for the Athletic Association in red, and the portion to the authority in blue. For suites, the authority receives 12% of the revenue, but the Arena Authority also paid back to the Athletic Association approximately $530,000 from this 12% in 2016. That payment reduces the authority's share to only 3% of the suite licensing revenue. Not reflected here is the fact that the Athletic Association also receives 2 suites at no charge. Now, of course, an interesting provision in the lease agreement relates to seating for private suites. There's rows of seating in front of each suite that the lease technically allows to be sold to the public when the suite's owners don't purchase tickets for a non-university event. But under the same lease, the public would not be allowed to enter the suite to get to the seating. Now, of course, we had a little bit of a humorous discussion with staff to try to determine what might be the best way to get to those seatings if they didn't decide to let access through the suites. We thought about maybe putting in a ladder. We thought about maybe, you know, a hook and a grappling claw. Maybe even my favorite was a jetpack. But in all seriousness, in all sincerity, a lot of times I will use humor to try to lift things off the page. And in this particular case, the situation is so incredibly ridiculous, I thought, well, maybe it would be important to highlight this fact. Now, the chart on the right does show the revenue from premium seating to the Athletic Association in red, again with the revenue to the authority in blue. Now, unlike the chart showing suite revenue, the numbers for premium seating only apply to university-related events. Now, it is no secret that TIF revenues have underperformed projections. The TIF underperformance is due to multiple factors, including a significant recession. Now, the chart shows the estimated TIF revenue in orange with the actual TIF revenue in green for 2010 through 2016. Now, as you can see, the actual revenue from the TIF has significantly underperformed expectations. In 2016, TIF revenues were less than 2/3 of what was originally projected, coming in at $5.5 million below target. Now, when compounded over time, a lag of performance of the TIF presents significant challenges for the Arena Authority. Now, at the outset of this project, Arena advisors referred to the University of Louisville Economics Department analysis of historical sales tax receipts. The analysis was based on questionable data. In examining tax growth rates, the analysis used a property tax history that looked back 10 years, but a similar analysis of sales tax looked back 16 years. The 16-year time frame included a 1990 to 1991, a year in which there was a 1% increase in sales tax rate in Kentucky. Sales tax make up the vast majority of TIF payments. Now, by including 1990 in the calculations as a starting year, a tax increase was baked into the analysis where there was no reason to think such a rate would be expected. This was a one-time policy change that should not have been factored into the TIF projections. The numbers on the tax analysis chart for Jefferson County are not even actual data as we would think of to begin with. They were only estimates. The state, oddly enough, in our research, we determined that the state does not actually collect tax receipts by county, or they don't have a track basically sales tax receipts by county. Now, although ultimate projections were more conservative than the University of Louisville analysis, they were not actually conservative at all if you consider that the analysis was based on flawed data that included the year of the sales tax increase. Now, the faulty analysis of the overly high growth rate contributed to the unrealistic expectations of the TIF performance. Now, TIF projections were so unrealistic that it was originally intended that the TIF revenues would enable paying back additional principal ahead of schedule. No additional principal has been paid down as planned. In 2015, 100% of TIF revenues were used for senior debt. Again, the next year, in 2016, the vast majority of TIF revenues were also applied to senior debt service. Now, plans also intended for $3 million per year to go towards a renovation and replacement fund beginning in 2011. But this fund currently has a balance of $642,700. And that's instead of when we were looking at this, we looked at it for a 6-year period. So technically, you would think there would be somewhere around $18 million in that particular fund. Now, lack of these reserves impact the life of the arena, which is a greater concern than the extension of given that the extension of the TIF financing up to the additional 45 years. Now, as a result of these factors, the vast majority of support for the arena comes from taxpayers. This chart shows the taxpayer support in green, the operating income generated by the Arena Authority in blue, compared to the required debt payments for 2016 on the right side in purple. Now, again, this illustrates that 75% of operating income is from taxpayer support, either in the form of metro government payments or the TIF revenues. 2016, and of course we looked at it, and 2016 is actually one of the better years in recent history for the authority. Now, this particular graph shows the future required debt payments of the authority beginning in 2017, peaking in 2029, then dropping and leveling off. Now, as you can see, there continues to be a long period of increasing debt service obligation that is, of course, troubling for the arena. As the Arena Authority proceeds with its plans to refinance the bonds, it certainly may be beneficial to move towards more of a level payment schedule. I think would basically better help them match those particular revenues, and it is my understanding that's potentially what they're going to target for. Now, the arena is, of course, an important venue for the University of Louisville, the City of Louisville, and the Commonwealth of Kentucky. The arena should not rely on additional taxpayer support alone to be successful. To ensure the long-term sustainability of the arena, all parties benefiting from the arena, not just the taxpayers, should formally renew their commitments to the project. Now, of course, I appreciate the committee's time. Before I go to questions, I would like to thank the great work of staff. We have an exceptional staff, and they have done a fantastic job, both with the financial statement audit as well as assisting us in developing these additional observations. At this time, I'd be happy to answer any questions that you might have.
Auditor Harmon.